Good afternoon to everybody and welcome to this panel session as part of GTR Saudi Arabia, focusing here on the potential for export credit agency supported financing in the kingdom and whether there is the opportunity to do more than we have seen so far. My name is Simon Lee. I am from Crédit Agricole Corporate and Investment Bank based in Dubai, and I'm responsible for the export finance business of Crédit Agricole across the region, covering the GCC and Egypt. I've been in the business over 30 years, and most of that I have been working on Middle East transactions. So I'm delighted to be joining you today. I am joined here by an expert panel with me, representing different perspectives. So if I can ask each of the panel to introduce themselves in turn, please. Michelle.
Good afternoon, good morning to everyone here. My name is Michelle Leong. I cover the business origination activities for UK Export Finance. My responsibility is as a country head for Kingdom of Saudi Arabia, Bahrain and Jordan. I'm based in Dubai British Embassy. I will be relocating permanently to Saudi Arabia next year. A former banker from Standard Chartered Bank, so I report into London. Thank you.
Thank you, Michelle. And Ahmad?
Sure, thank you. This is Ahmad Alshubbar. I am the Vice President for our group covering both Treasury and Strategy out of Saudi Arabia. We work in the oil field and we operate the largest offshore service vessels fleet in Saudi Arabia, working predominantly with the oil company. And I spent my most of my career in banking, covering both corporate coverage, investment banking on the debt side, and then jumped the fence to join Rawabi almost 3 years ago. And excited to be involved in this discussion and hope we can add value and share some of our experiences.
Thank you, Ahmad. And Lutfi, please.
Thanks, Simon. I'm Lutfi Ali. I head the finance team for the Middle East, North Africa, and Turkey region for General Electric's grid software business. Been with the company for close to 10 years now and had a diverse set of experience with them across multiple industries. Started off with GE Capital, was looking at their treasury team as well as the credit card business. Moved on in the US for the powers team and was helping structure some of our longer term service contracts with them. And a couple of years back, moved to Dubai, where I'm currently based in my current role, looking after the grid software business and the financing team there. As Ahmed mentioned, looking forward to a good session today. I think it's an interesting topic and we'll get to learn a lot more, all of us. Yeah.
Great, thank you very much, Lutfi. So let's make a start then on the panel itself. And before we look at the potential for more OECD-ECA-backed financing, let us briefly look at what's been done so far in the kingdom. So we have a slide which will give you a little case study, and we can just very briefly talk about the history of ECA financing in the kingdom so far. So if we can have the slide up on the screen, please. So actually, if you look back at what's been done, ECA financing in the kingdom, I think, really started with the large project finance deals that we saw a spate of in the kingdom, particularly in the oil and gas sector. Where these were very large-scale projects with obviously partners alongside the likes of Aramco and SABIC. And we saw many of those deals being concluded with the support of multiple export credit agencies. Then we started seeing the use of ECA financing by some of the larger corporates in Saudi Arabia. So in 2009, for example, Saudi Electricity Company transacted their first ECA supported financing, actually in respect of a number of gas turbines from GE. And they followed that with a succession of ECA supported financings, including from Asia, as well as from one or two of the European agencies as well. And of course, there were the ECA supported financings in the telecom sector as well, starting with Mobile back in 2013, 2014. And then actually what we see here in this case study is perhaps the latest evolution in the use of ECA financing in the kingdom. Because last year, for the very first time, the Ministry of Finance, so at the sovereign level in Saudi Arabia, tapped the ECA supported financing market. And for those of you who may have heard the Debt Management Office talk about their overall debt financing strategy, they explained that this was really the third pillar of their debt financing strategy, obviously following what they put in place with their syndicated sovereign loan, then of course tapping and continuing to tap the debt capital markets, and then the ECA financing being the third pillar of that strategy. And they started last year with this first deal, which we have on the slide. And this was a relatively small deal, bearing in mind we're talking about the Ministry of Finance of the Kingdom. So it was very much a test deal, a pilot deal, if you like, for just over $250 million. And it was effectively refinancing buses from Germany, which were being supplied to the Riyadh transport network, which is obviously very much integrated with the new metro system, which has been constructed over the last few years in Riyadh. And it's obviously all part of the design, which is to ease congestion in the city and to encourage more use of public transport. And obviously, part of the appeal here as well was therefore the fact that the loan was structured to be compliant with green loan principles. And therefore, it was actually the first green loan in the kingdom and indeed in the region, and only the second green ECA supported loan globally. So a landmark deal for them in the middle of last year. And that was followed later on last year by the second deal, at the lower half of that slide. Very different in many respects, a different export credit agency and a very different amount. So a large transaction, $3 billion in total. And interestingly, this was an untied facility supported by K-Shaw, the Korean Export Credit Agency. And when I say untied, what I mean by that is it was not linked to any specific project or to any specific contract. And therefore, it was structured more flexibly than a traditional ECA supported financing would be, and more like a corporate loan structure, which of course was very appealing to the Ministry of Finance, together with the amount and the flexibility that was showed by K-Shaw. So those two transactions, I think, mark the evolution of the export finance business in Saudi that we have seen so far. And well, the purpose of this panel is really to address what is the potential for more ECA financing in the kingdom to come. So let me turn to our panelists, and perhaps starting, Michelle, with you from the Export Credit Agency perspective and UKEF in particular. Can you give us your perspective here, and how much experience does UKEF have in the kingdom? How has that evolved, please?
Okay, thank you, Simon. So in terms of financing projects in Saudi Arabia, we saw very active local banks participation, well, very active and still are, who are able to provide a long tenor financing with very light covenant. But having said that, as you mentioned, there are a plethora of ECA transactions. Back in 2013, UKEF underwrote the $700 million transaction for the Sadara project, sponsored by Dow and Saudi Aramco. And also we have provided our support to the Aramco a couple of years back. Now, back in the UK, we are providing our support directly to the UK companies bidding for various projects in the kingdom, notably the export insurance product to Burton and South Derbyshire College for their export contract into Saudi Arabia. Now, this is the first international female college in Saudi Arabia. Over the past 18 months and at the height of the pandemic, UKEF shifted our strategic focus into providing more direct support to our UK companies to beef up our supply chain, and also to fund their capex. You see the likes of Rolls-Royce, £2 billion, Jaguar and Ford, £500 million each, using the EDG, Export Development Guarantee, and General Export Facilities. Now, as the economy recovers, we will be looking to underwrite more business, more risk overseas, if there are an element of UK content. Now, as things stand with the Kingdom Vision 2030 and its ambitions, ECA will be seen as an alternative source of financing for sponsors to tap into for liquidity, in addition to the conventional local bank borrowings and also capital markets. So you mentioned the Euler Hermes and K-Sure deals. So these could be a starting entry point potentially for more ECA's involvement. Thanks.
Great, thank you, Michelle. And so sectors, you mentioned a couple of sectors there, Michelle. Sidara, obviously, petrochemicals. You mentioned also education as well. Do you see any other sectors as being particularly active, or where you see particular opportunity for UKEF?
From ECA's perspective, our financing is very much driven by the sponsor's procurement strategy. So we look at first the UK content. So where I see UK export, the opportunities are construction, where there is in-depth UK supply chain in the design, engineering, procurement, and construction services, especially the giga projects as they pass through the feasibility study stage. We are going in big time into clean growth projects, as you mentioned, which follows the green bond principles, renewable energy related projects in the kingdom, as the kingdom transition to low carbon and net zero targets in some of their projects. Things like infrastructure charging for electric vehicles, power and renewable energy sources and utilities, such as water sustainability, water desalination and wastewater treatment. Back in the UK, we have more than 200 UK companies under British Water, which can provide relevant goods and services to activate UKEF support. Infrastructure projects, as you know, we closed the largest Egypt monorail transactions supporting the Bombardier contract, £1.7 billion, the only ECA with a consortium of banks. Education and healthcare, because we have a good supply chain there, and technology transfer, given UK ranks third globally as the hub for innovation and technology. So these are the sectors of focus for us.
Interesting. Thank you, Michelle. You mentioned power, you mentioned renewables. So Lutfi, let me turn to you and ask you for the exporter perspective from GE. And I mentioned obviously the very first facility that was put in place for SEC back in 2009, supporting, I think it was 23 gas turbines from GE. But what has been, Lutfi, your more recent experience in Saudi over the last 18 months or so? And how large a market is the kingdom for GE, please?
Sure. So I think, Simon, I'll start with the later part first. From a GE perspective, we are front and center of some of the key industries, which are the kind of the sweet spot for ECA financing, right? So if you think about power generation, out of the 78 gigawatt generation in Saudi Arabia and the kingdom today, GE machines provide 50% of that. It's the same thing in healthcare, where you could go to any public or private hospital in the kingdom today, and you would find GE equipment. And same thing with aviation or with the other places that we work with right now, right? So Saudi is a very big chunk of where we do business. Historically, the ties have been really great with them, and specifically with SEC, they're one of our biggest partners globally that we work with right now. Unfortunately, we've not seen as much traction historically on ECA financing versus even other places in the region, like Iraq. We worked with UKEF to get $3 billion of financing earlier in the decade with them, right? Big part there, and we've done similar work in other parts of the region. And previously, when I'd speak to our customer base, to our bankers, I'd hear couple of major regions or themes in terms of why ECA wasn't seeing as much traction. Firstly, it was about the fact that the liquidity was just available to them locally. And I think a lot of the value proposition didn't come through. And the second thing was just the impression that it's a real cumbersome process in terms of the timelines required, how quickly they could close it and things. I think what's changed over the last 18 months, and specifically with COVID, is the rising debt levels has opened kind of a window for us. What's really helped is the two deals that you highlighted, which have specifically with the Ministry of Finance, that kind of made a solid case that this is a model that would work very, very well for all parties involved. And we've seen more and more questions, specifically with SEC. There's a big engagement that's going to happen shortly with 6 gigawatt of power generation that has to happen really quickly. We'd be looking for similar financing there, and we're looking at the grid side as well. So that's kind of where we focus on going forward.
Great, thank you, Lutfi. Michelle mentioned obviously the giga projects. Do you see much opportunity there and much potential from an ECA perspective?
I think it's still early days, Simon. So far from what we've worked with there, I think the one thing that is critical both from our customer set as well as just the banking is our customers look for someone who can handhold them through the process, right? And so the queries have started, the questions are there. They're looking for a lot more work, and having a big deal out there is the best thing that would happen. So I think we'd start with the power sector and then work through there. Yeah.
Okay, just a question that's popped up from the audience, Lutfi, whilst you're on. How does your work diversifying in Saudi compare to your work in other markets, would you say?
How does the work diversify?
So in terms, you mentioned obviously a big part of your focus in Saudi is power, but also healthcare. Is that a similar balance, a similar split to that which you see in other markets in the region?
Yeah, I think maybe the aviation might be a little smaller. It's bigger in the UAE. But yeah, healthcare, Saudi is the biggest market in the region. Same thing for power. It's the biggest market for us and grid as well. So Saudi is the most important market for us, in terms of the region and the scale of things that happen there. Absolutely.
Okay, thank you. So Ahmad, perhaps I can turn to you from a Rawabi and borrower perspective and just ask about your experience of ECA financing so far, and where you've got to in that process and how you found it, particularly taking into account what Lutfi's just said about perhaps the perception that has existed perhaps previously about sometimes the process is a bit cumbersome. But what can you tell us, please, about your experience, please, Ahmad?
Sure. Thank you, Sean. Now, I'll flip the question a bit and start from where we're getting funded traditionally. As a group, and similar to all privately held groups and that are not GREs specifically, we are more of a traditional borrower from the normal commercial banks and predominantly the local banks, very a few interactions with the regional and global players in general because of the ample liquidity available and the satisfaction level you usually get from the local demand of such assets. Now, because of the quality of the offering we bring to the market and most of our business is with Saudi Aramco and its companies. So we have a good, let's say, story to tell. And we decided 2 years ago to start diversifying our funding pools and tap into new buckets and find some more competitive structures specifically to cover the tenor requirements. Now, currently, we operate almost 65 vessels, different sizes, different shapes. We're talking about north of $1 billion asset base. And these assets are very long term. And there is a stage where the normal conventional bank borrowing will reach a tenor where it will start to become less attractive if you want to maintain such pricing and or some competitive cost elements. Last year, we started the diversification during the heart of the pandemic, and we started our Saudi Riyal Sukuk program, and we have been issuing fixed income from the local market with the focus to distribute to non-bank investors. And we were very successful in that. However, that did not give us the right tenors as well. So instead of going with the conventional amortizing term loans with the balloon structure at the back end, we started to explore with the ECAs, especially in the Far East. We own a majority shareholding in a company in Singapore that operates those visas there and own them, and we have our Saudi entity as well that works with Saudi Aramco. So we started to discuss with the different ECAs from the Far East, predominantly the Chinese market, of course, to see where we can do things differently and how we can structure something with them, especially that most of the shipyards that we would work with are Chinese government owned in one way or another. And there are another component or another component of focus, which is the European equipment, European made products. For instance, all the engines you would use, there are the usual suspects who would produce the engines that are fit to the specifications of Saudi Aramco, and they are themselves happy to provide financing and some of their financing arms. So the experience started. It did not start with a high level of complexity, to contrary to what most people see. If you are used to seeing and discussing project finance transactions, then this is almost the same checklist that you will have to attend to. And if you have done any international transaction, the sort of advisors, consultants you will need to engage are almost the same. But you get an advantage of long tenors that can actually meet the expected lifetime of the asset that is being financed. And what we're discussing today covers two aspects: refinancing of the existing and having a standby setup or structure to fund expected contracts coming up or assets related to long-term contracts. At the end of the day, we enjoy a very, let's say, competitive advantage in this market, especially in Saudi Arabia, where the impact in the oil and gas sector has been less painful than any part of the world. The industry has proven that it is more resilient, along with the players that operates in it, and more agile and able to weather out the distressed market. And such performance during the pandemic enables you to get, let's say, across the end line of most of the global agencies or even global banks who would work with you on such transaction, whether it's a club syndicate loan or even a bilateral setup that you can work out something, depends on the size and the appetite and how we diversify. So all of these are opportunities that we are discussing today. And there are areas that we are discussing for a potential business we would do in the Far East as well, against the government offtake that's in the space of energy and LNG to power generation, which is something that would as well get the attention and the focus of the ECA market.
Thank you, Ahmed. So what would you say has been the biggest challenge so far in the ECA financing process, and how would you say that things could be improved further?
Well, I think I'll base it on your earlier illustrated example, my preference would be to go to the more of a corporate loan structure. The ECA will start with the preference of having, let's say, a ring-fenced project finance type of structure. Now, the exchange of information and conveying the actual picture of how the transaction looks like and reach a middle ground of what a contemplated transaction should look like, what's the general theme and general terms should look like in a way that meets the requirement of the ECA and the other lenders who would join such transaction, and at the same time meets the operational requirement for the corporate. The market is very familiar and very comfortable with the giga mega projects, the power, energy, petrochem, refineries, oil and gas in general type of structures, because it's the most common and it's a large ticket and it's a very, let's say, very typical type of structure that you would see in all these transactions. So it's an off-the-shelf product in one way or another. You do a couple of tweaks, and repeated transactions with the same GRE does not require that much of effort. Even from credit clearance and approval process, it's way easier because you know the sponsors very well and you have dealt with them and you have the track record. Now, as a newcomer to that space and a privately held company does not obviously share the same scale of the GREs, then things start to take time to materialize. But otherwise, I think it is something that we're keen to complete and do successfully, and finding the most suitable, let's say, terms that are acceptable to all parties involved.
Thank you, Ahmad. So a question from the audience, and I think actually this is for Michelle, actually, a couple of these questions, actually. So Michelle, are overseas ECAs involved in any of the mega projects that have been announced so far, like Leong or Red Sea?
We are. We have a lot of discussions with the Giga projects and also with the PIF entities. Right now, I think it's at RFP stage, feasibility study stage. So things are progressing at a different stage. I think COVID has kind of like slowed down things happening in the kingdom previously, but it has picked up since then. So we look at financing of the export contracts, the EPC contracts. So as and when things are being awarded, and there are UK element, UK procurement in the contracts, this is where UKEF will come in and activate our support. So as I mentioned, our support is very much based on the sponsor's procurement strategy. So a lot of discussion has been happening between UKEF and our Department of International Trade.
Great, thank you, Michelle. Another question, I think, also for you, Michelle, is about how OECD ECAs in particular are facing questions over their mandates and how ESG compliant their financing activities are. And to what extent does a market like Saudi Arabia provide challenges both in the types of business to be financed, but also in terms of perception and reputation, in the sense that obviously Saudi is a market which has been predominantly focused on oil and gas sector opportunities?
I think there's a couple of questions, so I'll try to answer all of them. If I don't, Simon, just remind me. So in terms of UKEF activities in the Middle East, Saudi is by far and will be the most active markets for us. There, as I mentioned, there's been a lot of discussion in terms of the oil and gas sector. As of 31st March this year, we no longer provide our support to the overseas projects for the extraction, refinery, and transportation of oil and gas. However, back in the UK, we are still providing our support to our UK companies actively involved in this sector. The NOCs, there are two stories here. One is fossil fuel. The other one is also the transition strategy. So this is an area where UKEF would like to be very much involved with. As you know that last month we have announced our climate change strategy, where UKEF has committed to our net zero greenhouse gas emissions by 2050 across all our portfolios and operations. So as far as clean energy transition story is concerned, we are very interested to look into these projects. In terms of hydrogen, this is nascent technology, so very much an ECA play at the moment. So we can potentially look at to cover technology risks on a risk-sharing basis. Now in the region, as I mentioned, the NOCs will start with the blue ammonia, blue hydrogen. Saudi Aramco has done one with the Mitsubishi Group, the Japanese. So we look for more, and also the Giga projects will also have the net zero emission targets. So this is something that we would like to be involved in. Have I answered all the questions, or Simon, have I missed anything?
I think you have actually, Michelle. That's very helpful actually. But perhaps I can actually ask Lutfi a related question here on environmental concerns in particular. And from an exporter perspective, do you think that borrowers in Saudi have a full understanding of the environmental and social due diligence requirements of ECAs? Do you think they are perhaps a deterrent in some respects to ECA financing? Or do you think the fact that actually the ECAs do have a rigorous environmental and social due diligence process is actually almost an opportunity to have the kudos of a label of an ECA financing, knowing that that environmental due diligence has been completed? And how do you see things from your engagement with borrowers on this issue?
Sure. So I think, Sen, that's a great point. Specifically, as I said earlier, the perception is there's a long checklist of things that you have to go through for an ECA and get things done. And our impression has not been the same, whether it be a commercial loan or an ECA. At least in our recent experience, we've seen pretty much the same kind of expectations in terms of what's required in the project from an ESG perspective. The questions are almost the same and the concerns are the same as well. And our customers are aware of these requirements. So from an oil and gas perspective, yes, on that side of the business, we won't see as much ECA. But the other ones, they're aware of what's required, and it's not any more stringent than what's required for most commercial loans from national banks as well, or expenses. I think that's what we see there, and that's what we are telling our customers as well in terms of what will happen in the future.
And Lutfi, do you see a sort of much greater focus and emphasis on ESG issues from your experience in Saudi over the last 12 to 24 months? I mean, alongside everything that you're seeing on a global perspective, is that also reflected in the kingdom? Absolutely. And,
it's coming right from the top, from the Crown Prince, and we're seeing that reflected through our major customers. SEC is taking stances on promoting hydrogen. So hydrogen is a great place for us. From our gas turbines, we'll probably switch over to hydrogen very quickly. And that's more and more something that's attractive to them. And we hear more and more questions on them. Same thing on solar, where we aren't directly involved, but we provide software for those facilities. And that's, again, a big play for us coming in. So definitely a lot more questions, interest, and switch that's happened far faster than what we thought would happen in Saudi specifically.
If you would allow me, Simon, I would like to chip in here a bit on the ESG, because I find this pretty much common that the general perception that it's maybe a GRE-driven initiative or government-driven initiative. But even from our perspective, there are too many things that, at least for us as Rawabi, that we've been doing for ages. And when we talk about ESG, everyone is focused on the E and forgetting about the other components and governance and social aspects. We've seen green bonds, but we haven't seen any social bond yet. We haven't seen any other, let's say, aspects. Now, taking a step back on how the market has been adapting to the ESG, it did not happen this year with all the restrictions. It started years ahead. For instance, and at least in our organization, the women empowerment has been there for ages. Since the 90s, we have been hiring women. We have 2 board members that are women, and we have 2 independent board members in a privately held company to start with. And that's something that's not common. The management is totally separated from the shareholders. That has been adopted since 2007. So all of these aspects had led to an earlier catch up to the environmental aspects. And we started to provide Saudi Aramco the hybrid engine to the vessels that we operate and we own. And we brought the diesel electric engines way ahead before anyone was talking about the new IMO concessions and requirements. Even Saudi Aramco and Saudi Arabia are signers of the Marble Treaty, which limits the age of vessels that operate for that particular sector, which has a focus on the environment and how good is it to continue to operate such vessels. Now, the additional aspects of adding some more fuel efficiency, less emission as a result of operating such vessels as a logistical support to that important sector have been always a key area of focus by us as operators in that field and the client at Saudi Aramco. We provided more smart ship concepts to Saudi Aramco recently to make sure that all efficiency and consumption and status of all the fleet is 24/7 available to them for monitoring and for being able to gauge and audit such efficiency as required. So there are too many aspects that have been always been area of focus. Even on the social responsibility aspects in the kingdom, all corporates are now in a very competitive way trying to create value. It's not on anymore the charities that give out support to those less fortunate, but now it's more of how to enhance the community. It's how to institutionalize such social responsibility aspects. So most of the components of the ESG ratings that are now becoming area of focus and ESG audits and having a focus of the investors today in the global market and lenders to limit their exposure to non-ESG compliance companies is becoming something that is less or more of focus, and everyone is trying to gather everything they have and look at it and try to build the ESG story instead of just looking at what's there in the market and what people talk about in the ESG space and try to mimic that. So there are, I believe, at least from our perspective, I believe that a lot has been done. Maybe at least for us, we have a KPI as an organization to publish our first ESG report next year. We don't have to, we don't need to, but we want to if we are as good as we think we are. of course, we're biased to ourselves, but we would like to demonstrate to the stakeholders that we work with that we are up to the level of quality that we claim ourselves.
Great. Thank you, Ahmed. So, Michelle, some more questions for you from the audience. So, how do ECAs set limits for countries and sectors? And how do they actually set those limits? How do they calculate limits? And how do they monitor and manage them?
All right. Interesting questions. Now, the UK Export Finance, I think, is the only ECAs who publish our country limit risk appetite on our website. So you can see, and it is looking at category 1, category 0, category 1, category 2, all the way to category 3 countries. So in Saudi Arabia, we have a country limit of up to minimum 4 billion pounds. And the country limit is renewed on a yearly basis. So we have our risk team in London will have our own internal discussions, and also with the external, with the rating agencies. So this is how we set the limit. Will there be any increase in that? Watch this space. So maybe yes, given the projects that the Kingdom is involved in. Now, as far as sector is concerned, we do not have a limit on the sector. As I mentioned, our support is very much skewed towards the procurement strategy, or where we have our strengths in. So this is how we set our country limit. So it's very much a yearly. We hope to do more business in Saudi Arabia and utilize all our country limit.
Great. Thank you very much, Michelle. And with that, unfortunately, I think we have run out of time. So I'd just like to conclude by saying a very large thank you to the panel today for their input, for their views and their comments. And I hope to all of the audience, I hope you found that an interesting and worthwhile panel. And obviously, we're available for further questions separately if you'd like to follow up. But thank you for your time. Thank you for the opportunity to discuss this. Very much look forward to more ECA financing in the Kingdom. Thank you.